So I'll just like to, very quickly, I'll do a quick introduction for myself. So I'm the head of Fintech at BDO, and I work with a large number of challenger businesses here in the UK, but also ones that have global propositions. I'd like to now move on to introduce my panel. So I'll let Rob first, if you'd like to introduce yourself.
Hi, happy Monday morning, everyone. I'm Rob. I'm one of the partners at Balderton Capital. We're the leading venture capital firm focused on early stage tech investing, 100% in Europe. And we've been very active in fintech. So we're the first investors in Revolut. We're investors in companies like Go Cardless, Comply Advantage, Prodigy Finance, and many others. And in insurance, we're investors in Zigo.
Okay, Ben.
Yeah, my name is Ben Rose. I'm one of the founders of Digital Risks. So we provide business insurance as a subscription, and we deliver insurance products which are more relevant for modern companies. So we insure things like data breaches, intellectual property disputes, claims against founders from their investors, that kind of thing. We also have an enterprise part of the business, which is a team that provide advice and bespoke cover for more complex risks. So in that space, we're doing a lot of stuff with fintech companies, lots of stuff in the payments space, and also things like medtech and cryptocurrency.
Right. Jonathon.
Hi, I'm Jonathon. I'm Commercial Director at Urban Jungle. Urban Jungle is an InsurTech focused initially on the renters market, home insurance for the renters market. We have rebuilt the tech stack from the ground up, whether that be insurance policy management, sales, relevant for this audience are our partner APIs. Focused on the renters market initially.
Vica.
Hi everyone, I'm Vica Manos from Anthemis Group. I run the group's financial wellness investments, so invest in very early stage, pre-seed and seed, fintech, InsurTech, and health tech with a well-being angle.
Okay, thank you. So look, let's go straight into it. And I think I'll start. The first question will be a little bit of a cheat because it's not about the product of the future. It's about the products that are there now. So my first question is, the products that are there now in the market, which of those do you really see are going to really sort of take flight this year and really going to start to scale up? I'll start with Vica.
Thanks. So in 2019, my money's still on risk prevention rather than mitigation, which is something very topical, if we're talking about insurance. So in order to achieve that, what we're effectively talking about is behavior modification. And in order to be able to effectively affect behavior, the right engagement tools need to be in place and the right incentivization methods. So, a very simple example that everyone's going to relate to of what I'm talking about is actually it started in the beginning of the decade with telematics. So it will be either leveraging hardware from the telematics use case to a Fitbit to our mobile phones, or trying to create engagement through an app in order to get better insight and collect data about the user. And today, technology allows us to do it more than we ever have before. So if we're able to understand how to engage with people better, we can offer the right incentives. Most often, it will be economic incentives, but not only. So for example, if we think about health insurance, the incentive is also to be healthier and live longer. So I think that there's been a lot of work done by InsurTechs, but not only, also by health tech companies, which we work with a lot, in order to be able to make that behavior modification effective. And I think that it's now starting to happen. We see more and more pilots with insurance companies.
Okay, so it's good
prevention.
good stuff about collaboration as well, which we can touch on. We can touch on later. Jonathon.
Yeah, so I think what we've seen certainly in the last kind of 6 to 12 months is the emergence of some vertically integrated consumer-facing insurers that are targeting very specific niches, and I think we see that particularly in the US, whether that's Jetty, Lemonade, Ladder, and we've really seen them start to get the product right. So I think we'll see in the US and European versions, hopefully including ourselves of very similar businesses, start to build brands and scale, in particular using partnerships, distribution partnerships, really to reach consumers and scale efficiently. So I think, and we'll maybe come to this later, using the APIs and the API economy to kind of build those seamless journeys and really grow businesses quickly.
Yeah, we will. Yeah. Okay, Ben.
Yeah, so, well, lots of InsurTech are actually becoming a bit more mainstream now. They're, acquiring a bigger sort of market share. From my personal perspective, buying, home insurance, car insurance, that kind of thing, I want to know that I have the right level of cover and that I'm paying a fair price for it. And some companies in the space of making how insurance is priced more transparent to the customer, helping them understand what is covered, are emerging. And Risk is a really nice example there. And in terms of sort of scaling that business model, I mean, they're launching some partnerships with some bigger car brands, that kind of thing. So I think we'll definitely see some growth with those types of partnerships as well.
Okay, great. Rob?
I was supposed to disagree, but I actually kind of agree with the last 2 points around this moving towards a sense that you have best-in-class insurance products for different verticals, and they do their one thing extremely well. And they also start to build a brand around it and build that trust. And then you need that layer on top that is a partnership layer, or it's that first insurance app that someone has that brings all that together. I think what we saw over the last few years is people trying to do consumer straight out the box is quite hard. It's quite hard to get the right route to market. So you need to be that partnership layer. That might be Revolut and Monzo and the neobanks, or it might be an insurance app. And I think we saw in Germany a few years ago, there were a bunch of these companies like WeFox and others trying to be this insurance app, this kind of insurance wallet on your mobile. And now we're seeing all the British comparison engines really pushing hard on that, doing lots of TV advertising for their comparison apps, companion apps. So I think that trend could actually be here finally.
Okay, good. So what's coming? And I guess when I ask what's coming, what is driving what's coming? Is it technological advance? Is it consumer demand? Or is it actually consumer expectation and more than demand? Vica?
Yeah, I think you hit it in the head. You hit the nail in the head. Financial services have been talking about understanding customers and consumer-centric products for decades now, but that hasn't really been the case, right? We all thought we were consumer-driven, we were actually product-driven.
Right.
I think it's the customer expectation that has changed. And it's that and a combination with data, right? So I think that the customer expectation part is around frictionless, around ease of everything from sign up to the overall customer experience. And on the other hand, as I mentioned earlier, data and what it allows us to do in terms of underwriting, understanding the customer, underwriting, and being able to make the whole experience smoother.
Okay. Because I hear a lot about people saying, the consumer demands now this seamless and frictionless experience, and that's sort of the move forward for this consumer-centric product or service more than product. What does it actually mean, though? What does seamless mean, and what does frictionless mean? Because they're different things, aren't they, from an actual product perspective? Yeah,
I think seamless kind of implies that it's invisible, that it's not there, and I know that we've had a conversation about saying how it's not necessarily about that. It's more around removing the friction. I think also consumer today has very short attention spans. The moment that something is hard, the moment that something just doesn't work as you expect it to, there's so much choice out there, you just move on to the next bit. So maybe a little bit also impatience.
Right. Okay. Right, Jonathon, what's coming?
Yeah, so I think we've touched on it there. If you look at the generation of customers, they're used to using the neobanks, they're used to using Netflix, they're used to using Amazon. Yeah. They want everything to be very, very easy. And the question for us is how can we facilitate that? And you touched on the point of data. I think if you look at the neobanks, they haven't had to reinvent any technology. There is no technology that has been needed to be invented to do what they're doing. But they can leverage, InsurTech can certainly learn from what they've done, but we can also, as an example, leverage their data to make it seamless. And I think, an API has existed for however long, right. But the big insurers, perhaps with their legacy technology, haven't been able to fulfill that journey. So I think as InsurTech, what we can do is enable that advancing customer experience that customers expect, without reinventing the wheel.
Okay. So is this more about, again, this is a collaboration piece, which we can touch on again and later, around sort of, the nuts and bolts can sort of stay with the legacy insurers, and then you're adding a facilitation, or InsurTech is adding something different on top?
Yeah, I think you're adding that flexibility and speed of iteration that comes from having modern technologies, but I think, as it's been talked about variously, that real focus on the consumer and what they want, and you allow an insurer with the experience, with the compliance knowledge, and frankly, with the money to access that market through an InsurTech. And I think lots of InsurTechs know that for a substantial period of time we're going to need to collaborate with legacy insurers to fulfill those things that we can't ourselves.
Okay. Ben, what are you seeing?
With the gig economy and freelance workers, I think there's about 5 million people who are self-employed in the UK, and maybe 40% of that is people in the professional services sector. And they've not been serviced very well in the past. The products have been not really, most of the product, particularly for the professional service sector, have evolved from tradesmen, those kind of insurance products. So making those products more flexible for people who work freelance is something which I expect to happen more and more over the course of the next 2 years.
Rob, what are you seeing and what you're going to be investing in 2 years' time?
I wish I knew. So I guess I've been following insurance now for 4 or 5 years, and I'm interested in what startups have that incumbents don't. Because there's a lot of disadvantages that startups have. They don't have the capital, they don't have the history, they don't have the claims data, they don't have the claims handling machines. There's lots of disadvantages. What do they have on their side? What they have on their side is speed, agility, technology, tech first. And being that smooth integrations that brings. And that means I think what the sectors I like the most are where those advantages are most apparent and most significant. So what are the categories where being a tech-driven approach gives you a real advantage over an existing insurer? So I think where can that advantage really come in? One is a new category of risk where there isn't lots of historic data, where you can actually take a bottom-up approach, learn from machine learning, learn fast, and have better underwriting than an existing insurer, because the historic data the existing insurer has is not relevant. So cyber insurance is certainly an area here. We look at drone insurance as another one, insurance for Deliveroo and Uber drivers. How do you do that? There is no claims history. So that's one point. Second point is the ability to have great APIs, link into anyone, and be very much driven by integrations. I think that's an advantage tech companies have. And then the long-term piece is a huge cost advantage. So if you can automate everything, you have a huge cost advantage as a tech-first InsurTech. The challenge is you have to get there. And you look at the amount of money being thrown at Lemonade, trying to get to enough scale where their cost advantage through the technology gives them a real benefit in the US homeowners market. And there's a long way to go for them.
In respect of sort of investment into InsurTech, is there a slight hesitancy for big ticket investment? Because one, because of regulation, and two, because it's sort of the poor relative of the challenger banks?
So I think a couple of years ago, I'd say there was huge optimism. And I'd say most VCs were really excited by InsurTech because they see this enormous market. They see companies that are really data and technology companies, or should be, and see a huge opportunity. And there haven't been enough success stories yet that start to get a lot of my colleagues excited. So unless you sort of spend a lot of time in this industry, I think it's easy to move on to crypto or move on to AI bots or whatever the next sort of shiny thing is. So I think we need some more of those success stories to really come through. And for some of the first generation of Lemonade and Root and Metromile, Zhong'an, to sort of show some really strong bottom line results as well as top line results, then I think that excitement comes back in. So I think it is there. I think there's a lot to see, and there are some really interesting companies at sort of seed Series A stage now in Europe, which could really come through.
Right. What I'm hearing a lot, and I think I might jump into this, I was going to cover this later, but I think I'm hearing a lot about data and use of data and APIs and sort of what I see as the data journey. Now, I think as was touched on before, APIs, this isn't really new. This is, and sort of one of the questions, I suppose, which I'll go back to actually, is that, a lot of people think, is technology moving too fast for financial products? And is it moving too fast for regulation? So I might ask that first. Is it? What do you think, Jonathon?
I mean, is technology moving too fast? I think if we could touch on it, you need to be customer focused. And if you start with the customer problems and then the technology is the solution, then it's impossible for technology to be moving too fast. Is it moving too fast for regulation? I guess it will always be. There'll always be people in startups pushing hard and pushing regulators and pushing partners hard in order to deliver that better customer experience with the technology that is available that perhaps the regulation wasn't written to encompass.
Okay.
The classic one is the unsupervised machine learning. You could do some really smart underwriting with unsupervised machine learning, but what does it end up being? Does it end up discriminating based on things you should not discriminate on? And I think that having that transparency, and that's coming now. I think machine learning that is transparent is very much coming in.
Yeah.
If I can add, the problem is that it's not like you get a bunch of data, throw in some machine learning, and boom, magic happens. It's garbage in, garbage out, right? It's not that straightforward to figure out what data it is that you need to feed into it, and then it has to be structured and curated and all of that stuff. And there's a lot of tech that is helping us do that today. But when we're talking about something like insurance, yeah, the regulator will come in. That's their job. I think the solution to that is InsurTech, talk to the regulator. I mean, I think the UK in the space of fintech is a great example of how that dialogue can actually become a source of innovation in the end rather than a hindrance. So yeah.
Okay. So I think, moving on then to talk about the data itself, and sort of we've touched on APIs, and I think we all appreciate the value of APIs in the customer journey, and I think we can appreciate that that's technology that's there and it's been there for a long time. If we move on to sort of thinking about use of data, then use of data, we've all mentioned that, and sort of on my side, on the banking side, there's been quite a lot, about the open banking and that revolution that I feel is still to happen, actually, in some ways. And I'm not sure it's the same situation in InsurTech, actually. Are we still sort of waiting for something to happen instead of sort of driving this use of data via the opportunities of open banking and open data?
Yeah, I mean, I haven't really seen much happening from an insurance point of view, which is exciting with open banking. Of course, open data is really interesting, but it can also be a bit dangerous in some ways. I mean, while it might be beneficial from one person's point of view in terms of reducing their premium or giving them access to cover they might not otherwise be able to access, for somebody else, it means that they're probably not going to be able to get insurance, or they're not going to be able to, or they're going to be paying higher premiums or at a disadvantage. So I think the industry is still trying to work out how to, what is a fair way of using open data for underwriting.
Okay.
It's interesting, yeah. What is the equivalent for insurance? Is there some sort of insurance footprint that I have that I had? I claimed for a stolen bike 3 years ago, and I had a motoring offence 7 years ago, and therefore my insurance score is X. That would be great if someone could pull that together. That would be really help underwriting me, but it doesn't seem to exist today.
Yeah, sorry.
I don't think it would ever exist, because when we're talking about insurance, maybe when we're thinking about monoline insurance, it might for a specific thing like telematics, but overall, there's no way that you can have a single score that gives you based on your claims data, because again, I'll have to stress the behavioral element. Our risk is dictated by our behaviors, by how we live our lives, by how we drive, by how secure the locks in our windows are, to what we put into our bodies, and do we exercise, depending on what kind of insurance you're talking about. And I mean, I think it's interesting. There's a few innovators out there that are trying to crack that holistic underwriting, one global insurance product where essentially you, the person, the individual, are being underwritten. I guess let's see how that goes, but I find it super interesting because of the fact that it's so difficult.
Yeah. I mean, there's clearly no easy answer to this, because, of course, we've got different stages. We've got prejudicial decisions and we've got exclusion itself. And what I see is obviously, it's seen as a good thing. More data, it's got to be better. More data, better data. But that is going to lead to more exclusion and more prejudicial decisions. Now, on one side, I'll say, the regulator's not going to like that for a start. There are statutory bars anyway to certain areas of exclusion. What is there not something that InsurTech can be doing to assist in this and to to sort of mitigate the risks of prejudice and exclusion? Because I think that's probably what people are looking for.
Yeah, so I think as a consumer-facing brand, especially one that's trying to be customer-focused, you have to be very clear to the customer on what you're going to use their data for. So there's an upside to sharing this, and there's a downside to sharing this as well. And I think perhaps some brands might choose to be less transparent about that, but it will come back around in the long term. So I think while there's always going to be risks, transparency is critical. And if you can honestly put your hand on your heart and say, look, these choices are clear for you, I think that gets a brand a very long way in kind of mitigating some of those risks.
Okay.
And to me, I see the reverse. I see insurance helping inclusion. So I think take Zego example. So if you're the average Uber driver, you're quite hard to insure. You have a thin credit file, there's probably limited data, there's some bad experience of a pizza delivery in the 1980s. And so your insurance policy, if you can get one, is £2,000, and it's payable up front because you cannot get premium credit financing. So you're asked, it's a £2,000 barrier to becoming an Uber driver. Whereas if you take Zego, they can insure that on an ongoing basis. You pay as you work. So it's triggered when you start your shift, it stops when you stop your shift. You're paying 55 pence a minute or whatever it is. That opens, and they also they sense exactly when you started work, when you finish work, they see how you drive, they use the mobile telematics, so they know if you drive sensibly. So that opens up insurance to the 99% of great drivers out there. Yes, the 1% who drive terribly are excluded, but I think it's worth it because otherwise the existing insurance industry does not serve this demographic well.
So the 1% that are excluded, what does the insurance industry do about that?
Well, I guess
Or should
the
they be
black boxes are right. There's the black box with young drivers, and
Yeah.
you force those people to drive sensibly because you force
Yeah.
tracking on them.
Okay. I suppose moving to something that was mentioned much earlier around collaboration. So collaboration, well, firstly, is it always a good thing? And secondly, is collaboration the route to scale? Vica, what do you think?
Yeah, we've all heard about the death by 1,000 pilots, right? So I think, no, it's not always a good thing. And, you know, from an investor perspective, when we're working with our portfolio companies, we actually do advise of, you know, think twice. But when it works, I think it can be beneficial for everyone. And one thing that we've seen at Anthemis in our experience, because for a very long while we also had advisory services, so we've seen the incumbent side of the equation. We understand the pain points. We've tried to work with them in terms of, you know, how do you innovate and all of that stuff. And I don't think either can win without the other.
Right.
It's you know, as you were saying, Rob, earlier, there's a lot of advantages that that incumbent insurance companies have, and through a collaboration, I guess both parties can benefit from it. I mean, the most personal experience that I've had via portfolio companies has been in the healthcare sector, so health techs doing pilots with insurers, and the key driver there for the startup is data, because in the health space it's incredibly hard to get the right kind of data. But on the other hand, the underwriters, the insurers, understand the benefit of understanding the people that they insure better and making the underwriting more sophisticated, I guess, or advanced. So there's equal incentives for both parties.
Right. Jonathon?
Yeah, I think if you look at the insurance value chain, you're very rarely going to get an InsurTech that from day one starts by doing the whole value chain, and that's the truth of any industry. So, you know, there will always be collaboration. I think the critical thing, and you touched on it, death by 1,000 pilots, is how you carefully choose how to collaborate with the best partners possible, whether that be from an insurance supply side or from a distribution side. And again, I think you're almost customer focused in a different way there, which is you focus on the people you're collaborating with and working, you know, the best you can with them. I think, yeah. So the whole value chain, I think, will always see collaboration. Certainly, you know, for the first 5 or 10 years of an InsurTech's life.
Right. Ben?
Yeah, I mean, collaboration is really, really important. We've been talking about it. It's been mentioned a number of times, and it is essential for underwriting capacity and that kind of thing, I think, really at the moment. Yeah, I mean, again, as a business from, you know, starting out day one, we've been having quite challenging conversations with underwriters about, challenging why do you want that information? Why is that? Why aren't you able to offer cover for this? And really, basically challenging their approach to the underwriting process to give them our customers a more customer-centric approach.
What about, Rob, sort of collaboration across different product lines? I'm thinking collaboration with the neobanks, so it's sort of a one-stop shop marketplace type model. Are you seeing anything like that?
Yeah, so we see a bit of that. So Revolut, one of the options within Revolut is an insurance tab, and you can trigger, I think, 2 or 3 different insurances, and you can make it really seamless. You can trigger it within, 5 pokes of your finger, and you can trigger travel insurance. And it will sense when you arrive in France and ping you and say, Rob, do you have travel insurance for your French trip? So make it super convenient to do that. So I think you look at those players, and those are the distribution side, and that's really interesting on the distribution side. And then you look at the existing insurance industry, and that's where it's the capacity and the claims expertise that are the 2 things InsurTechs really want from that. And yeah, I think as an investor, I'd love to invest in MGAs. I much prefer a capital light model. But only if insurers can move fast enough and work with them at speed. I think what we're seeing now, probably 3-4 years in, is that startups are getting to know who actually moves fast and who talks about moving fast, but actually 6 months later they want just a few more meetings. And I think that's starting to become known in the industry now, which is good because I think it pushes people to really live up to their promises on moving fast.
An industry that 2 years ago I said I wouldn't be working with, and I am now, is crypto assets. So a couple of years ago, I didn't think they were here to stay. Now, regardless of what people's views are as the long-term value of these things, they are here to stay, certainly the big name ones. And they are crying out for insurance. Rob, are you seeing it?
Yeah, so we look quite a bit at crypto, and I was talking to various parts of the crypto landscape. You need to run a node or you need to run an exchange, and security is crucial. That's the way you differentiate from other exchanges or nodes, is by being the most secure place that you can't get hacked. How do you demonstrate that? You have an insurance policy backing you up from a big name insurer. So I think if people can pull that together, it's super interesting. But there's no historic data. It's going to be really hard to underwrite, so it's going to be super interesting to see what happens.
Yeah. Ben?
Yeah, so I mean, we insure businesses. We've insured a number in the crypto space. That said, it is very difficult to arrange that type of cover. There's a few different risks. So there's the actual crypto assets themselves, but then there's also, if you look at an ICO, for example, the risk that the directors might have as part of that, and also professional services around and security around running an exchange, for example. Some underwriters are interested in looking at that type of risk. Generally, we get them comfortable actually more so around who they've received legal advice from. So, we go into basically to get the underwriter comfortable that this is a legitimate company who's been through lots of planning and is working with a good legal advisor. That tends to work, but most underwriters that we speak to is absolute no from a crypto point of view. So there are underwriters out there who have got a bit more of an understanding about it, and they're curious about risks, but it's really difficult to secure cover for those businesses.
Okay, I think I have time for just one more question. I think as we all know, we live in a hyper-individualistic society. I think anybody who's sort of navigated their way here today with people walking into them as they look on the phones appreciates that. I think there's a reaction to that, and I think part of the reaction to that, and we're seeing it with the tech giants, we're seeing it with some reaction from the regulator, and I think the reaction is that certain behaviours now are unacceptable, whether that be at a corporate level or at an individual level within businesses. Is there perhaps a sort of a differentiator going forward in respect of ethical behaviour and appropriate behaviour? And I think particularly if you're looking at a startup that tends to be driven on the let's just get it done sort of attitude, is that changing, and is there a differentiator there? What do you think, Rob?
So one of the things, we have a set of values at Balderton, and one of our 5 values is we believe in the power of ethics. And that starts day one. It's when we're investing or before we invest, you set up the ethical setup of the company, and it's really hard to change that over time. And yeah, you won't get found out until you're big, but when you're big, you will get found out if there isn't ethics at the core of the company. So it's really important to us.
Yeah, brilliant. What do you think?
Yeah, I mean, from my point of view, most startups in the InsurTech space are really born out of trying to do something better for the customer, whether that is giving them access to a product that they couldn't access, or making it more flexible, making it more appropriate for what they need, better pricing. And from the regulatory point of view, I think most customers most InsurTechs are trying to treat their customers fairly. There will obviously be people that try and do the wrong thing, but actually that's not just now. That's been happening for a long time in the insurance industry. There's been lots of dodgy stuff that have happened, particularly prior to the FSA coming in. So, I think actually InsurTech is a really good thing for that.
Yeah, from our perspective, I think we see a lot of businesses trying to be as transparent as possible about what they're doing and why they're doing it. And I think from a consumer perspective, while if you try and explain why you make a decision after the fact, that's much harder if the consumer disagrees with it versus, before, here's our roadmap and here's what we're developing and why, here's who we give commissions to, who we get commissions to. That type of transparency, I think, here's what we'll do with your data we talked about earlier, I think really starts to take some of the values that the guys have been talking about and really prove them to the customer either before they purchase or, through their journey with the company.
Vica?
I think, Jonathon, you've said it all, transparency. I mean, you can't not be transparent this day and age. It's, again, one thing that consumers, I think, expect. It's also hard, even if you try, to not be transparent. I mean, we do live in an age where a movie can't be produced anymore unless they have sexual harassment insurance. Things come out in general. So, I truly believe that fintechs, InsurTechs, they really get into it. They usually quit their high-paying jobs, take a very big risk because they see a problem that they want to solve, and they just put everything into it. So, I think we're good.
Yeah. And I think that's what you'll be seeing more and more. Sort of at this conference, there are a lot more sessions this year on ethical financial services and sort of ethical use of data and behaviour. And I think we'll see that increasingly as the years go on.
Yeah.
All right, I believe we are now out of time. So just say thank you very much to my panel. It's been great. Thank you.
Thank you.